Oh, Jerry, we could probably get started.
Yeah, sounds good. I think we're good to start too. So let me see. Yeah, I mean, thanks for coming out for this, guys. Like I said, DeFi is a major focus right now. So we're all here to, learn everything about decentralized finance and all of its applications. And I've seen a lot of things on your guys' website about like hackathons and especially this near hackathon. I don't know if you guys want to share more about that, but we might be able to send some people to do that. There's a ton of opportunities it seems like you guys have. So
awesome. Yeah, cool. Well, thank you very much, guys. Good to see you today. My name is Anthony. I'm CEO of Encode Club. I've actually got two of our teammates here as well, Anupam and Steve. And good to talk to you all today. I'm going to talk about DeFi, give a general introduction. I want to first kind of get a sense of you guys, what you know already. So just by kind of you can do two things. One, if you want to show your faces, you can. If you don't want to show your faces, that's actually fine. There's a raise hand button. And this there we go, hello Mario. The raise hand button is a good way of indicating what you think, really. It's in reactions. So first thing is, how many of you would say you know what DeFi is? So raise your hand if you do. Okay, one, Maxwell. Nikita. Anyone else know what DeFi is? Obviously, Jerry. Nate knows. Anyone else?
definitely
Raise your hand if you...
I don't know how to raise that. So I just click the hand button. Is that?
Yeah, good. Exactly. Just like I've done. You get reactions, and I'll learn it now. If you click reactions, then raise hand. Just to get a general sense. Thank you very much. Now, raise your hand if you know nothing about DeFi. You don't even know what it is. Should be the inverse. So if you've already got your hand up, lower it. So I'm going to lower mine. It should be the inverse. So raise your hand if you don't know what DeFi is. Basically, you didn't raise your hand the first time. Okay, Wilson. I feel like we've got one or two liars in the room. Some people on the fence. That's okay. And okay, good. Everyone put the hand down. Now, next, put your hand up if you can code. So if you can code in any shape or form, you would say code, raise your hand. So Wilson again, Nikita, this is good. Ian, very good. Rodrigo, Jerry's good. Steve's good. I know Steve can. He went through our boot camp. Okay, good selection. I love it. How many of you can raise the lower hands again? It's really energetic, this. So take your hand down. Rodrigo, take it down. Or I'll put it down. Put it down. Last but not least, how many of you can code Solidity? So raise hand if you can code. Riley, very good. Anyone else can code in Solidity? Okay, just Riley, very good. Well, thank you very much for that, guys. Let's just get a good sense of the audience. We'll try and make this a little bit interactive along the way as well. I'm going to tell you a little bit about Encode today, and but mainly I talked about DeFi. I'm actually using a presentation that's a little bit, I remember first doing a year ago, that has stood the test of time, which is pretty impressive for crypto. But then we'll go from there. So let me get the right screen. Okay, cool. Anupam, is my screen nice and visible?
Yep. There it is. Yeah, looks good.
First of all, a little word about Encode Club. Encode is, we're trying to be the best place for Web3 education. You can do this through coming to our workshops, to our boot camps, to our IMAs, to our hackathons, accelerator investments. And what we're trying to do is organize fantastic programs with the leading partners in the world in order to help you learn about blockchain, then get into the space. We then help you in broadly two respects. One is we'll help you either get a job, or B, will help you raise investment. And we do this, one of the reasons we're so good at it is we work with pretty much the best on a long-term basis. Names that might be familiar to you, the Polkadots, the Avalanches, the Filecoins, the Solanas, the Polygons, the Graphs, the Binances, the Chainlinks, the Sandboxes, the 1inches. If they're not on there, I've just forgotten them, or they're coming up very soon. What this means is we do great programs. You're welcome to go to our website if I didn't accidentally click backwards. And you can see that right now, you could do an accelerator with Algorand, hackathon with Nia, a coding bootcamp on Solidity, an education series on Polygon, a graph education series. And it's all online and completely live. So if any of that interests you, if you want to get a job, if you want to raise investment, come talk to us. Anupam's going to put these details in. I believe we have a nice form you can fill in as well. But yeah, that's the majority of my shilling right now. Everything we do is free, global, and virtual. And just come talk to us if any of that's of interest, which I'm sure it will be. You can also scan this QR code. I'll leave it on the screen for a second, which will take you straight to the form, which basically gives us your details, and you can organise a call directly with us. I'll leave it on for 10 more seconds in case anyone is scanning, or take a screenshot and scan later. I'm going to talk about DeFi today. I'm actually going to switch to an old presentation, but I like a lot. It was from our DeFi Club last year, which is an education series about DeFi. We had some top partners involved. And I'm going to talk you through from first principles, show you some cool stuff, and hopefully leave you enthused about DeFi. Of course, right now is a bit of an odd day because the markets are a complete shit show, pardon my French. We've obviously been down, ETH is down. For those who know Ethereum, 27% in the last week. This does broadly actually, for those who want a macro trading theory, if you map that map, let's look at the Ethereum map. So keep in mind the Ethereum map, 7 days, looks like that. Now look at Dow Jones. Let's go 5 days, sort of looking quite similar. So if anyone ever tells you they're not correlated, like, I mean, obviously you can come up with the big theories, but crypto assets tend to be very tied to real world as a speculative asset. So that's something just to bear in mind. But it's a weird day to do it because markets are down and it looks like we're in a bit of a bear market right now. Yeah, still, the DeFi is cool. And so I'm going to ignore all that stuff about our previous series and go straight to the cool stuff, which is what is DeFi. So DeFi basically is, to understand what DeFi is, we first need to know what TradFi is. Can anyone fathom a guess? You can put in chat. Metaphorical Mars bar. You probably don't know what a Mars bar is, but metaphorical Mars bar on the line for anyone who can guess. What is TradFi? Should be fairly simple. Answers on the chat. Very good. Traditional finance. Excellent. Jenna's got it. Traditional finance. Specifically, it's like normal finance, like just all the full set of normal finance banks, more modern retail stuff, stuff that Morgan Stanley, JP Morgan, all that do, Credit Suisse, Deutsche. And we mean basically these set of things when we talk about traditional finance: asset management, credit, currency, custody, compliance, debt, derivatives, exchanges is funding, models, insurance, lending and borrowing, savings products, tokenization, trading. At this point, what I should have done is embedded a particularly good video in here, which is if anyone ever you watched Wolf of Wall Street in one of the early scenes where Matthew McConaughey is explaining how a stock works. He calls it a fugazi, a fugazi, a wazi, a woozy, to describe this all seems very bizarre. Lots of things going on. Like, what does it all mean? It really kind of gets into your brain, all of these words. Anyway, finance. To understand TradFi, DeFi, we have to know what TradFi is. Broadly, these things. Fundamentally, it all comes back to money. We're talking about, with decentralized finance, new money, crypto money, money in the digital age. And the first way to understand money is as a spreadsheet. So if we're trying to understand what money is to begin with, then actually money fundamentally, it's a means of exchange. It's the way I pay Jerry. If I want to buy a chocolate bar of Jerry, I need to basically give him something, some common medium that he's going to accept in order so we can value this chocolate bar. Unless I'm going to say, I'll trade you 1 pig for that cow, or I'll trade you 2 pigs for that cow. That form of barter is good, but what happens when you don't have something that clearly, like, what if 1 pig doesn't clearly equal a cow? What if 1 pig equals 1.5 cows? I can't chop my cow in half. So we need a means of exchange. That is what money is fundamentally. But fundamentally, money in the digital age, where we don't, if I'm trading money across continents or countries or even states, I'm not going to use physical money. I'm using it digitally. Money is just a spreadsheet. It just says a column that says I have this and Anupam has that. If I send money to Anupam, that I have now $10 left and Anupam has $10 more. Money is maintained as a spreadsheet. But someone needs to manage this spreadsheet. And traditionally, this is banks. So it's the banks are the person responsible in some complicated way to manage the spreadsheet of who has what. In central banks, manage the spreadsheet of all the banks in that country, or who has what. And this obviously extends into a big area. And if you've ever wondered why it takes so long to send money from the US to China or something, or Africa, it's because all these different banking systems, all these different spreadsheets basically have to talk to each other. It's like they're all in different formats, moving like from Excel to CSV to, obviously I'm not meaning specifically, I mean kind of analogical terms, analogous terms. But fundamentally, money's a spreadsheet and someone needs to look after it. Blockchain kind of changes this. Blockchain basically says, instead of the spreadsheet needing to be maintained by someone, what if it was just maintained with code? What if it was like everyone has access to it? Everyone can make a contribution towards it. And the code will mean that it enforces itself automatically. What could we build money from scratch? And this is basically, we're getting to a little bit complicated, what like a consensus mechanism is. It's taking lots of different transactions and as code verifying they're the right transactions rather than a bank stepping in and going, yes, Anthony paid out upon. And we don't need to get into the tech of it, but this is what a blockchain broadly does. It's being the middleman. It's code being the middleman instead of a kind of human or an institution being the middleman. And obviously we have these features as a result of this. It's immutable, it can't be changed because there's no party that can change it. It's decentralized because we're trusting the code, not trusting any person. It's trustless. Actually, it's very trusting. We have to trust the code. We don't have to trust any one party. It's incentivized. You've got an incentive to kind of take part in the system, which we talk about later. It's open source. All the code is publicly available. It's community owned. Everyone kind of owns kind of money in crypto. It's competitive and it's programmable. Some of these I'm skipping over. They should be kind of what you should know about blockchain. But these are the general features. And smart contracts also allow us, if you know what a smart contract is, and again, I might be skipping a few steps here. Smart contracts is basically writing applications based on crypto money. And that's quite cool. So what I can say is only move money in the case where, only give Anapom $10 in the case where Jerry pays me $10. That'd be a simple application. Or I could say, if £1,000 gets sent to this wallet, this account, send everyone who contributed a share relative to how much they contributed. This is what the ICO boom was. Fundamentally, if you have digital money run on code, we can build applications very easily using that code. Code is law in its fact. But what we're kind of trying to do here, and again, I've skipped a few steps, so we've kind of rushed through the kind of, first of all, the thought like, there's this thing called TradFi. It's kind of these things. All these things are kind of linked to money. Money is kind of a spreadsheet. Like you could have a bank and like people running the spreadsheet. What if code just ran the spreadsheet? That's all blockchain is. And it's got some complicated thing about how the spreadsheet works. And it has these features, which like you kind of a product of like the code is law. And you can build apps on the top of it, which is kind of different. Like it's kind of hard to build applications on a bank. It's like it's banking services. But what are we trying to replace here? And I'm actually going to play a clip here, which I think kind of serves it. The reason why we might want to change traditional finance to something that is code-based. And hopefully this will play. This is from The Big Short, which is a famous movie. Some of you have watched it. It's based on a book by Michael Lewis, who's a famous author. And here in this scene, you have one of the protagonists, Christian Bale, asking for a financial product to be made. And I think this serves as an indictment of what if inefficiencies of TradFi we're trying to avoid against. So I'm going to see if this plays. Can everyone hear that?
Can't hear it.
You can't. No.
It's a little quiet.
I don't think I can go higher. Oh, it's a great show. What I'm going to do, you can watch it later, because it is like an amazing scene. I'll describe it, which is like 10x worse. But anyway, in the scene, Michael Burry wants to bet against the housing market. And in betting against the house, this is a true story. He's like, I need a product to be created that allows me to bet against the housing market. So he goes to a bank, to people that structure these products. And he says, okay, will you sell me a product that I want, like, if all the banks go bust, I get a payout. And they talk amongst themselves, can actually play it. I'll have the scene on quiet. He's asking them, and like, oh no. Let's do it this way. He's asking them, they're kind of laughing, like, what do you mean you want us to make this product? Making products they do all the time, but this is a particularly exotic product. And they're talking, and they're like, okay, well, like, here's the product, or here's like how we could do it, here's the prospectus. And it's like a 100-page document. And they're talking about it, and eventually they say, yes, we'll give you this product. This is a microcosm of how financial products are made. It's people deciding them, getting lawyers to write them, and people are enforcing them. And when you look at banks and you look at the buildings of banks, look how big they are. They're hundreds of stories high with buildings around the world. This is bloated. Finance is this big bloated, huge thing that is people led. But money, especially digital money, is fairly automated. Banking systems work. So what we're trying to achieve with DeFi is like all this inefficiency. Couldn't it just be code? And we'll talk about why this shouldn't be a good case. But this is basically it. It's like, couldn't we replace banks with code? Why couldn't we not? Like, there's so much inefficiency. And humans basically create inefficiency. Like we're inefficient, like we're slow, we have emotions, like we're not automated. And crypto basically reimagines finance from scratch based on this idea that money is programmable, that not only can have money, but I can build apps with money. They will run no matter what. Therefore, any of you, that's why I asked if you kind of wrote code at the start. Any of you that's kind of written code, you know that when you write code beautifully and elegantly, it's one of the most amazing things in the world because it runs so smoothly. And crypto basically says, why couldn't we just rebuild finance, which is so important, with this elegance of code? And obviously, crypto all started with Bitcoin, which we know about, which is the first cryptocurrency. It does nothing except be traded. It's like has no other use case. It's kind of stupid. You'd never use it as currency. It's too volatile. Imagine if you paid someone their salary and then like the salary went down by like 10% in a day, or like up by 4% or down by 5%. Like that would be really annoying. So it's terrible as a currency, but it's supposed to be an example of how you would do a digital currency if you weren't actually stabilizing in any way, shape, or form. It's founded by this guy called Satoshi Nakamoto, and as a reaction to it, there was this thing called Ethereum, which had smart contracts. And everything in decentralized finance is not built on Bitcoin; it's built on Ethereum. And now I'm going to talk about what sort of things are built on Ethereum. What do I mean by DeFi? Like, what's going on? By the way, Ethereum is what we call a layer one. It's the first layer. It's like almost like a iOS. Think about it that way. If you're like, it's not, but it's like iOS, like building stuff on top of iOS. That's Ethereum. And you pay to build stuff. You pay to build stuff with this token called Ether, or pay to use this network, it's blockchain. So we'll talk about different DeFi things now. So what do I mean by DeFi? So one first example is stable coins. Anyone know what a stable coin is? Type if you think you know what a stable coin is. Probably guess it for free. That's a good example. What is one? Can anyone give me a definition? I'll also accept what is the value of a stable coin in dollar terms. Stays the same price. Good, Nate. Can you give me what value would it probably be? Coin used as a marker for other coins. Good. These are good answers. What? Give me an example of a value. Actually, all of these tokens have the same value. What is the value? Yeah, 1-to-1 USD. Good. So weirdly in crypto, we decided that stable value should just be $1, which is kind of weird given crypto's kind of reaction to the traditional financial system. They always kind of depeg a little bit. But broadly, stablecoin is this. Well, it's actual currencies that you can use day to day that's value is fixed to 1 point. So if I pay Steve his salary in USDC, that he knows that it's not going to change in value significantly. Like he can always redeem 1 USDC for $1. So this is kind of an essential bit of the ecosystem. And I know it seems weird. It's like, yeah, but Anthony, like, surely currencies were the first thing we need in crypto. Like, isn't that like the first use case? And I'm like, yes, but like not ones that actually can be used as proper money. So stablecoins allow us to have some form of stable value, which means you can always kind of denominate the trades we're doing. Weirdly, they're based in dollars. They're now non-pegged stablecoins. These both actually came out of Encode hackathons. Those who want to be a startup founder, both went on to do pretty well. Reflexer Labs on the left and Float on the right. And so Reflexer, rather than being kind of, most of these coins are pegged by, they basically just have a bank account with dollars locked up, and then they mint a like a USDC for like $1 digital dollar for every kind of dollar they have in the bank. So they're kind of pegged 1-to-1. That's why you can always go and be like, here's my USDC, give me my dollar now. We can always go with the dollar and be like, give me my USDC. But some of them use different systems. So this uses actually a bond system where you put your collateral in something else. You put it in Ethereum. And this looks fairly volatile, but if we look at it over time, like it's pretty much staying, I don't know what has happened there. It's pretty much staying in this band of like $3-ish, although that with a lot of noise. If you look at Float, for instance, it's pretty much staying. This is actually a coin that's linked to the value of Ethereum. But again, it's pretty much staying at like 1.5, 1.6. So it's staying fairly stable. But this one's meant to adjust and devalue and revalue depending on how the market's going. So we've got stable coins. This is cool. But you might be like, come on, like we had that to begin with. Exchanges, this is the big one. So in crypto, like in normal world, exchanges like the Dow Jones. And like they look like this on the right. They're like these big trading floors with like thousands of people. In crypto, an exchange looks like this. This is an exchange. It's pure code. And I can interact with thousands of people here. And I can swap from one token to the other in seconds, all through a smart contract. And by the way, there's no middleman here. This is peer-to-peer. So like I'll see you the Dow Jones and raise you Uniswap that like the Dow Jones, think how bloated it is, how many employees just the Dow Jones has and how much operation this needs. Crypto, DeFi, Uniswap. I can do this trade, and this trade is not through a company. This is just software. It's open source software, for which I think a private company runs the front end, but like the software is like everything in crypto is open source. I can swap between any currency at any time. And then you get abstractions on this. So this is an exchange where you can just, it's called Decentralized Exchange. You've got something like 1inch, which basically takes all the decentralized exchanges and aggregates them. Like that's also really cool. So I could easily move from this to this in a second. You've also got things like Compound that allow for lending. So what if I want to borrow a token I don't have in a second? Think how long it takes to borrow something in the traditional world. You have to over collateralize. That's the only thing. You can't do it without collateral. But yeah, here I can like borrow. So I could lend out, by the way. If I want to lend out DAI, so DAI is probably quite expensive at the moment just because people are moving in stable coins. I can get a 3% interest rate. That's pretty good. That's better than you'll get in the real markets. And let's see if there's any things that you can get. What's the best one? Looks like 2.99, 2.77 for other things that dollar like. Although the spread is terrible. Like I pay 4.55, even though it costs, you only get 2.55 if you lend it. So the spread is 1.5. You've got things like this. They're very cool. We've got things like options and derivatives. Look at something like DIDX. You can have basically perpetual products. Like we're starting to get into quite exotic, complicated financial products. And the cool thing about this is they all start usually with someone building something in a hackathon, like you guys, someone like you building something in a hackathon that is a financial product because everything's open source, so you can see how other people have done it. And again, that's not banks building it behind closed doors. That's you building it in public. Another example, something like, let's see if I can find one. Float Capital. This is another one that came out of Encode, worth a lot of money these days. Look at this UI. Imagine seeing a bank that looked like this. Like this allows me to kind of get leverage on stuff. Again, built by some devs. Should we see the code? Let's see the code. All public. You can go and fork it if you want. Fork means copy and paste it. All public, there to go. And this is like 5 guys from South Africa building a complex derivatives platform, effectively a synthetic asset platform from scratch. That's bloody cool. That has a lot of money go through it. And we can see how much money goes through it if we look at things like TVL in crypto. So TVL is basically total value locked in a platform. Let's see if I can get it. Yeah, so this like MakerDAO, which is a stable coin, has 16 billion in it. Things like Aave has 11 billion, Uniswap 9 billion. That's 8 billion. Like those are big bloody numbers. These are big bloody numbers. So these are quite cool systems at the end of the day. And again, they're usually built by coders in their underwear from scratch and end up having billions run through it. Yearn took on no private funding, never had an investor, launched in the middle of the night one time. Trying to think other ones that literally came from hackathons. Faye was this was by a student at, oh my God, I can't remember. University of, is it UCLA? Something like that. What else? See, there's others. Reflexer from Encode, 183 billion in it. Oh no. Trying to think there's others that are pure hackathon. Anyway, in any event, this kind of starts to give you an impression of like the scale here. And again, this has all pretty much happened in the last few years. A lot of crypto is enabled also through new ownership models through protocols. But if I look at the owners of something like Compound, so this is a lending one. So it's worth fully diluted valuation. So if you get all the tokens that launch tomorrow, 1.2 billion, pretty damn good. It is, we also, let's see how many token holders it has. So I think we'll sit here. 186,000 holders. Like that's like having 186,000 shareholders. What this means is it's owned by a lot of people. I don't think any one person would have more than a couple of percent at most, which is a very different way of running a company and the direction of it. Most of us don't own much stock in a bank. Most banks are public, but most people would own a tiny, 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 tiny fraction of a bank. What crypto science allows us to do is own this in a different way, have something really be community owned. And therefore, especially when we look back at the financial crash of 2008 and people broadly talk about banks as being quite bad actors, maybe in future, I'm not totally sure here, but these things can be avoided if we had different ownership models and we did have things that were community owned and rules were set by democratically within protocols. This would be quite cool. You also have these things called traditional exchanges, by the way. These are like normal things, but they're not DeFi. They're just they're private companies. So the ones you've probably heard of, Coinbase, Kraken, Binance, Robi. Problem with these guys is they often suspend withdrawals at a moment's notice and you can't get your money out. That's the problem with not being decentralized. The other thing about stuff being open source is it's hard to be a monopoly. A famous example is Uniswap, which is the one I showed you, was forked. Someone just copy and paste the code and got traction. If you want to start again, you can do so. And it's called SushiSwap. Looks pretty much the same. They just one day copied the code and started again. Like really cool. So that's something. Open source means it's very hard to have a monopoly because it's very competitive. People are always trying to defeat you. We spoke about earlier what some of the decentralized exchanges there. You've basically also got this idea that in DeFi that's, the old saying, like if you want to make a lot of money, don't be the better, don't be the gambler, be the house. Crypto allows you to be the house. So you can be a liquidity provider. It's a big thing in crypto and earn a fee, earn a share of the profits for doing so. That's why these protocols like Uniswap actually work. Is that what allow you to do is they'll allow you to put money into kind of put money in that earns fees that is used by the house and take the risk for doing so. And again, the end result is you've got this thing called liquidity farming and yield farming, but you've got people offering their capital out and being the bank. Again, big change. Like I thought everyone would love to, I'm sure everyone would love to be the bank or try to be the bank. And obviously means that if everyone's trying this and everyone has the opportunity, you've got more of a supply of cash, which might mean the availability of cash goes up, which means the price of borrowing goes down. Again, probably quite a good thing. And all of this is tokenized by design. So a token basically says, is usually liquid very quickly, you can trade it very quickly. It's owned by the community because people know that these structures are decentralized and open source. You never distribute them with a person having more than a couple of percent of the protocol. And it allows people, they're usually called governance tokens. They allow people to have a say in the governance and running a particular protocol. Just a few other kind of use cases to look at. You've got insurance. So we decentralize insurance. That's just something like Nexus Mutual. It basically means it's usually insurance for blockchain itself. So you can get a quote and you can own the token and basically be an insurance mutual. So be the other side, because insurers are basically making a bet that that they'll pay out if something goes wrong, but the chances of you going wrong is lower than the amount of money they make by you paying fees. So all this is to say that again, another product is rebuilt just with code and used very popularly by everyone. Talked about lending, talked about derivatives, and that's talk from ages ago. And if I switch to this one now, what we're trying to do here is we are making the assumption our financial system is broken. And I'll take your question in a moment, sir. But there's a general point here, which is that crypto is more efficient. Can anyone work out why? What's one of the reasons why? So I'd be very impressed when you get this. Can anyone get one of the reasons why it's efficient? That it can be efficient, not because it's decentralized, but because it's not traditional finance in the first place. What does traditional finance rather make you do that maybe adds a bit of slowness?
There's a middleman.
That's what. But why do you have middlemen sometimes? So sometimes to make money. Why are governments often the middleman? Can anyone work it out?
Because they need taxes on like that, like I guess the finances, and they need interest, and they need to make sure they're protected.
Taxes make sure people are protected. And what do we call the set of rules that keep people protected? Anyone?
Can you repeat that again?
Can anyone? What is it? What are the set of rules that keep people protected called by governments?
Oh, because the banks are backed up by the government.
No. What it's I'll answer it for free. So the set of rules that keep people protected are called regulation. We have regulations, and regulations are like the red tape that slow people down. And there is a good reason why we have them. It's to keep users protected. In crypto, like you can just lose all your money. And law, yes, and the law. I mean, crypto follows the law, but probably a broader interpretation of it. Crypto is basically like, if you kind of start from scratch, didn't really pay attention to regulations, what could we do? And that's a great way to be. But it's also kind of like, yeah, like it's kind of not a good idea that people can get scammed. And like, yeah, you're not actually checking if people are paying their taxes. Like, I'm sure the banking system would be more efficient if you said, we're going to make this kind of like easier for you to avoid not pay tax, and we're not going to background check you or check you're a bad actor, or like put any safeguards in to stop you getting scammed. So this should be remembered here. Like I'm painting this perfect picture of like, you can do everything with code. Anyone who's actually written code would be like, yeah, it's not as that easy in practice. And like, even if I wrote the perfect system, like I still have to like follow the law quite closely. I'm not suggesting crypto doesn't follow the law, but I am suggesting that crypto has designed a product that is for like fun, like financial use cases, and maybe doesn't fit like big dog, like you want to trade houses with it, so you have your financial system depends on it, because that system that we have now is a product of rules, regulations, and taxes. I want to finish with one thing, and it's a kind of a cautionary tale, which is like, okay, Anthony, so I've given you basically the argument. I'm going to use this guy. I've basically given you the argument that okay, DeFi is cool because it's like, what if you replace financial products with code? I've shown you the products, they have billions running through them. Like you can kind of see this is cool. And I'm sure any of you that fall down the rabbit hole will go quite deep down that rabbit hole. The next thing is to talk about why hasn't crypto taken off? I used to give this talk a few years ago, and before that was before the bull market. And if we get a bear market, it's going to be, why isn't it taken off again, even though everything went up in value? And I think at the end of the day, this is a guy called Tony Blair. He's former British Prime Minister, and I did politics, so you'll allow me this one. In 1998, well, 1996, 1998, the Labour Party, which was the left-wing party in the UK, came back into power with a fairly democratic mandate. And they basically tried to make everything far more open, free, and decentralized. And one of the reasons they did this was to kind of actually make sure they maintained control, not like did freedom for freedom's sake. So I'll give you an example. That England has like 4 countries in it. One of them's called Scotland, another one's called Northern Ireland, another's called Wales. And basically what Labour did is they gave power to each of these regions and put in like new democratic systems, which kind of weakened Labour's power, but also because Labour thought they were going to lose power later. 10 years later, Labour completely lost power because these democratic systems had like given like these smaller parties an opportunity to get into power, and like to the detriment of Labour. I always think about this analogy because crypto is a bit like that. Like if you started using crypto systems, the traditional banking system, like it'd be fairly unstoppable. It might be good in the short term. You get a boost in revenue. In the long term, like crypto systems are decentralized. You can't really control them. Anyone can build anything. A kid could build something. Like anyone can use them. That's the whole point of crypto systems. So like, I think they're very aware of this, and it's a slippery slope that once you lose control, you can lose all control, the Tony Blair case. And actually what I think is far more likely is we start seeing blockchain type systems, blockchain type efficiency, like decentralized exchanges, lending products, smart contracts used within traditional banking, but not as public blockchains, as like private blockchains. Like you need to be KYC to get into them. And maybe this is a good thing. Maybe we're going to get into crypto. I've tried to keep this talk away from the ideological side of like screw the banks, new system built by the people for the people. I don't actually care about that. All I actually care about is this efficient technology? Is it quite cool? Could it be used to make finance more efficient? I think probably the answer is yes, but like, I don't know. From a DeFi is like, it's not really taking into account how you properly do regulation and tax and stuff. So like, who knows? So I'm going to actually stop there. And that's my kind of very short introduction to DeFi. And I'll let people ask any questions they want to. Either Jonah has a question or his hand's been up for accidental reasons. I think because you've unmuted yourself, it's probably up for proper reasons.
I had a question about Nexus Mutual. So
Yes.
I've heard that one of the problems with it is that in order for a claim to be paid out, it has to be voted on, and anybody that'd be voting on the claim, it would be in their best interest to vote against the claim because they would be giving away the treasury. What do you so like what do you think about that? And
I don't actually know. I actually don't know the specifics how Nexus work. I imagine it doesn't work like that. I'm actually just quickly reading something to get familiar with myself on how that mechanic works. I know that they vote on the risk of it and like basically what fees you have to pay. I think it's determined by an oracle whether there's like an external anonymous source if the attack has actually happened. I'm pretty sure. Because otherwise, then you're right, the incentives would be completely out of whack. I think they vote on the cost, they don't vote on the actual whether to cover it. Because you're right, yeah, turkeys don't vote for Christmas.
I was pretty sure you hold the governance token and then you pay the fee and then you vote on the claims. I think that was what I was reading on it.
I must admit, I don't know the specifics of Nexus Mutual. You must forgive me. I know actually the founder quite well, but I don't know the specifics about work. So maybe it does work like that. But that system would probably be broadly abused if that was the case. I don't think it has been. So I don't think it's quite what you suggested. Cool. Any other questions?
I have one.
Go
So
for it.
I want to go for like, what's your like, I guess like view on the market right now with crypto being kind of in a bearish market, and how are you approaching the market right now, I guess?
Yeah, so I'll say with a few hats on. Like, so Encode has an investment fund attached to it. I also angel invest, so like I have kind of had to overview at this point. And my view is, first of all, I have to cover this. This is non-investment advice. This is literally just my thoughts, and so please do not take it as investment advice.
Yeah, for sure.
And even if you did, like what I choose to do is very different to what you might choose to do. In general, there's a macro problem. Which is that we've had really loose monetary policy. If people know what that means, like to keep the economy afloat, the central banks were printing free money and giving it, basically buying up debt with that free money. This broadly went to the banks and gave them lots of like very, very cheap capital. Meanwhile, interest rates are very low, which meant that like the interest rate repaying back this capital was very low. So basically free money went to the system, and this basically led to massive asset inflation. And everyone was like, well, isn't there going to be real inflation if you pump all this money in? Like, isn't stuff just going to like increase in price? Because like there's so much more money in the system. And they're like, no, and now it's happening. And we've had like in the US, there's things double the expected inflation rate, and that like very quickly gets out of whack. And the problem with inflation is, if you think inflation is going to happen, what do? You buy today. Like if you think a car is going to be worth 20% next month, you buy the car this month. The issue is if everyone keeps doing that, it raises prices immediately because you've got a massive influx of demand. So you can get these kind of inflation spirals that they're very worried about now. So what you want to do in return, you want to raise interest rates. If you raise interest rates and make monetary policy less loose, there's less free money and everything costs more, and that affects business. So the problem right now is you've had very loose monetary policy for ages, and now they're slowing it down because we've basically had it for 10 years and more with COVID, like 13 years. And the markets are reacting to that first and foremost. And that's a macro trend. And crypto is like broadly, just as I showed before, they were tied pretty closely, like the Dow Jones and the crypto chart. And like it's because like crypto is a speculative asset. It's a 24/7 casino. So my first thought is like it's kind of tied to the market trend. And if like the major markets are going down, crypto kind of will follow with it, probably much more extremely. That'd be my general thing to say. And then, yeah, just keep conviction. If you want to do very well, the people who did very well out of crypto, the ones who maintained conviction and maintained positions when it looked very foolhardy to do so, and doubled down when everyone thought it was lost. So if there is a bear market, a prolonged one, this is probably the most sound advice. But get some conviction first about why you think crypto is great. Not too political, that answer.
No, that was a great answer, honestly, and that's kind of what I was expecting to hear. And just because we're at like a lot of like, I guess, the trend lines where like the price falls under, we're going under, and I'm just kind of being patient and seeing like, because like I want to get in the dip, and that's like the goal. But I want to make sure I'm not like just catching a falling knife, like, if that makes sense.
Well, when you find out the answer, please tell me, because you'll make me a rich man. It's a really hard thing to do, isn't it? Like,
Yeah.
And balancing that risk is hard. What are you going to buy in the dip? What are you looking to buy?
Honestly, I'm mostly looking at Ethereum just because like I feel like that's kind of going to be like the Google of like Web 3.0, and that's how I like to think about it. And I'm just thinking about it as like I'm investing in Google, like back in the like in 2000s, before it really like was like so widely used, and I just think that's what it's going to be for, like, I guess, for the world eventually. But like I'm thinking of it more as like a 5-10 year thing. And so I just want to keep like DCAing into Ethereum, honestly. That's like the goal. The more I can build, the better.
That's fair enough. And also everything I mentioned. So there are different protocols, and they have their own DeFi infrastructures. Ethereum is by far the biggest.
Yeah.
Right. Everything I showed you was on Ethereum. So I think it's a fairly sound view, really. Yeah. Keep conviction. Or don't. But maybe. Other questions? Go for it.
I had a 2-part question.
I love two-part questions.
One, what are your favorite DeFi projects? And then 2, what's your favorite stablecoin farms or stablecoin projects for earning APY? Actually, 3-part question. And then, do you like any other chains? Are you bridging to Phantom, or are you on AVAX?
Great question. I'm going to be really awful. I'm just going to shill stuff Encode's come out of Encode. Yeah. So one is Euler. So these are also good. This is like alpha drop. Like Euler, XYZ, about to launch, one invested in by one of the biggest biggest investors, Paradigm, in the world. Won our hackathon about 18 months ago. That's why I love to talk about these stories, because they've come out of our programs and they've gone on to do well. So there are people who are like sitting in. I remember like when we did an event with Oxford Blockchain Society, and like he was there sitting in your shoes now, and like 18 months later, or a little bit more, 2 years later, he's the founder of a protocol that's worth a shit ton of money. So Euler is a lending market, which is quite cool. I already mentioned Float Protocol. So there's 2 things out of Encode. There's Float Protocol, which is a stable coin, which is an algorithmic one that again adjusts. It's underpinned by the daily auctions, and also its collateral is held in Ethereum, because you need collateral for any money. You need to like denominators. But it does these cool daily auctions. And then it's Float Capital, which is the synthetic asset one, which is so funny. We've had 2 things called floats come out of Encode. Other cool things, other cool DeFi products. I really like Saddle. We work with them quite closely. This is basically like making sure that that different stable coins are like fairly closely in peg with each other, so that you can move from one between the other like very, very fast. So we really like Saddle. That's cool. And then you said there's 3 parts. The first one was like what DeFi projects I like, which I've kind of answered badly because I'm being selfish.
Yeah. I said, are you on any other chains other than Ethereum? Are you bridging on Phantom? Are you on AVAX or?
Okay, yeah. So Encode, again, I have to be careful because Encode works with most people, but my personal favorites are Avalanche. I think it's very cool. And like nice if you want to be like, if you're EVM based already, Solidity based. Avalanche doing very well. Solana is obviously great, fantastic ecosystem there, building a bit of a moat because you need to know Rust. Polkadot, very cool if you want to. I mean, they're also becoming quite specialized in their own thing. Polkadot's quite cool if you want to. Like it has basically blockchains on top of it, lots of different specialized blockchains on top. So that's quite cool if you want to do something more specialized. And Near is very good if you like sharding, which is quite a technical thing, and it's got very good user experience. Probably forgetting a partner we work with very closely at this point. Polygon, if you want a layer 2 experience, if you want layer 2 is making Ethereum faster, basically. So I don't really have a favorite. I mean, I use Ethereum for everything, but depends what you want to do. Like if you were minting NFTs, I'd say just use Polygon. If you wanted a new DeFi farm, maybe I'd say Avalanche. If you were building new dApps, I might say Solana's quite cool, but you'd need to know Rust. So yeah, hopefully that answers it. In terms of stablecoin farms, I don't know at this point. Use Curve. Sorry. So either use Saddle or like the one I use is Curve Finance. You get like incredible interest rates. I bet I'm showing just my browser that way. Give me. So this is you can get kind of like yeah, like an 8% yield. Holding like I mean you have to hold Ethereum, which is some risk, but like you can get 2.6% there. You can boost it up and get rewards and get up to like 5%. So like that's pretty good, like up to 10%. And this is what it's basically doing is saying like, this is the cool thing about crypto is, let's say you put money into a, you offer up your liquidity. So I've got $1,000. I'm happy for that $1,000 to be used by other people temporarily. I'll take some risk to get fees out of it. So you can then take that position, which is like, okay, let's say that earns you 3%, 3% a year. So you can take that position and tokenize it and say, okay, my position is worth my stake plus my kind of expected return. So that should be worth $1,030 next year. In 2 years, that should be worth like, I don't know, $1,070. You can take that token of that and you can stake that. You can say, okay, I will stake that and its rewards to get more rewards. I'll take some extra risk on, but I'll get some more. And this is what it's basically doing. And you can do complicated kind of abstractions, almost like complicated like banking products that were made before, and get different interest rates by taking different tolerances of risk. So have a play with Curve. It's very, very cool. Yeah. Cool. Next question.
Hello. Can you
Hi,
hear me
Nate.
good? You can hear me good?
Yes, I can.
Awesome, thank you. So kind of at the beginning of the meeting, you were mentioning coding boot camps on Solidity and such.
Yeah.
And as you can see, a lot of us here, we have like a general idea of coding. I think a lot of us in these earlier classes, we learned Python.
Yeah.
And so a lot of us have interest in learning Solidity. So with our like base of coding, some of us know a tiny bit of Solidity, a lot of us are intermediate level on Python. How would you recommend advancing like our Solidity coding skills?
Yeah, so you've actually got 2 options. There's a Pythonic Solidity language called Viper, which I'm going to share. You know that Curve that I just showed you, that was written in Viper.
Oh, okay.
So if you like this, it's quite specialized. But if you're like, look, my Python is like amazing. I love the Python syntax. I love the structure. I would use Viper. Other than that, like you want to, Solidity is JavaScript based. So if you know JavaScript or TypeScript, it should be fairly easy. So it's not that hard. So our boot camps are basically, we're about to announce the next lot. They're basically 4 days a week, hour and a half a day for 8 weeks. It says 10 weeks there, it's actually 8 weeks. And these are happening right now, but we're about to announce like the next tranche of them. So if you follow us on kind of socials, which I'll get Anupam to reshare now, I think we're announcing a ton tomorrow. So 3 new Solidity ones, zero knowledge ones, Solana ones, etc. So that kind of gives you a flavor. But what I'd recommend for a normal person is just like who just wants to learn, is just do a Udemy course. Honestly, just kind of get into it, like do hackathons, etc. Like it's not very simple, but that's the best way to go. But if you do want to do one of our boot camps, they're completely online. We do take good people. It's only small class sizes of 50 people. Do let us know, and we'd kind of do sign up.
Are you guys going to be in Mexico City for the Avalanche thing?
We actually are.
No way.
We might be doing some education stuff there. That's so funny. How did you find out about that?
My dad's like really good friend. He's the head of marketing at Avalanche, Devin, if you know him.
Oh, I know Devin super well. That's
Yeah.
so funny.
Yeah, so I think me and Riley might go down there for the Mexico City.
Oh, fantastic. Yeah, that's going to be amazing. Yes, we are actually doing the education component for that. What a small world. That is fantastic. Well, that's Avalanche basically sponsoring a Formula E racing car, and alongside we're doing some education stuff every week, alongside the races. So that's going alongside race 1 on the 11th. So it should be very cool. Awesome. Any other questions, guys? Jerry, I think you've
Yeah.
got one.
I had a question. So what is your opinion on Tether? Is DeFi propped up by it, or how much does it actually matter to decentralized finance? Because there's so many other stable coins.
The joke is, it might be not propped up a lot. So the joke is with Tether is one of the biggest currencies, stable coins that a lot of crypto relies on, and like it might not be backed 1-to-1. It might be like really not backed 1-to-1. Like if there was a run on Tether, because like for these stable coins like USDT and USDC, so Tether and USD Circle, is they are like actually like they're quite centralized. Like they can stop you having it if they don't want you to, which is weird for crypto being decentralized. And you kind of can go there and like be like, I will pay $1 million, like give me $1 million of USDC. Like you can do that. Anyway, the joke is Tether might be really under collateralized, and there's been investigations before, and a lot of crypto is built on. Some stable coins are built on. It's so stupid. Some stable coins use USDC and USDT as their collateral, like algorithmic ones. And it's like, wait. Unless you're like a stable coin of stable coins, you're telling me your complex design is just like hold another stable coin linked to $1. Like anyone could do that. I could do that. I could invent Anthony stable coin where it's like all my collaterals in USDC. The short answer is, I don't think the risk is actually that high. I think we'd have found out by now. But like, I would maybe hold USDC rather than USDT. if it was one, but like the whole crypto market's screwed. If USDT went down, the whole market's screwed. No doubt. Cool. Anyone have any other questions? What I'm going to do is leave my email here, guys. If anyone wants to ping me, if you're looking for jobs, internships, we're really good at helping with that. So feel free to email me directly. I'll also share my Twitter as well. Feel free to tweet me, as the case may be. Let me see if I can actually find my Twitter. I'll follow back. Why not? And otherwise, guys, it's been an absolute pleasure. Good questions. This has been the best one we've done recently. So clearly Spartan is going to make it. Anyway, any other questions, guys, for now?
How do you feel about the NFT space right now with like just I guess like the whole bearish market?
I think the unfortunate thing about NFTs is all these things in crypto, like crypto is like this big like speculative bet. Everything like DeFi, NFTs, stuff on other chains is even more speculative. So like I like the argument for the NFTs. The argument is basically this: like this is the argument. Like the DeFi stuff is like is actually useful, as people just speculating. Like that's the problem with DeFi. Like, is this actually useful, or are people just trying to move money around to get more money? The NFT argument is this: okay, let's say Mario, I have Mona Lisa on my wall, and I'd say, okay, prove it. I'd say, okay, you show me the Mona Lisa. No. That means jack shit. Like you could just print a perfect like copy. Okay. And you went, no, I've got this, like, this is my art friend. He's that, tell him. And the art friend goes, this is the Mona Lisa. I go, still jack shit. Like, I don't believe you. What's happened to the one in Paris? Yeah. It's fairly difficult to prove you own an art piece of work. Or maybe if you do, like, to convince people you actually do, apart from if Sotheby's put an issue, a thing. But even then, like, I don't know. Crypto basically says this. It says this. It's like, what if I could like have the audit trail of like ownership of an asset, like on a public database that everyone can see? I can see it went from Mario to Wilson to Nikita to Steve to Anupam to Anthony, and that I own it now. Now this only works for a digital asset, an asset that itself is a file. But like and I think that's what we care about with collectibles. We don't care about the asset itself. We care about the fact we own it. And crypto gives us proof a way of like saying and showing to someone, like, I own this. You've got to prove that I am me, like, and I am this wallet. But if you've proved that, which is fairly simple to do, like, I own this asset. And I think that is a very compelling reason why digital collectibles are much better than physical collectibles. Go ahead.
Yeah, and then my other like thing to piggyback off of that, you think that we'll see like mass adoption of like concert tickets, like game tickets into like NFTs, because then you won't have the whole like reseller market and have like forging and people getting scammed when buying like tickets for anything, like such as concerts, festivals, like sporting events. Could you see that being like mass adopted?
Personally, no. The reason is this. They have to link back to the real world, which means you've got regulation and tax and problems like that. And like a crypto system is open and permissionless, that anyone can use it. And like it'd be very hard to stop people reselling stuff. You could actually stop. Like you can write into smart contracts. Like so if on most NFTs, if I go to OpenSea, I'm going to share my screen. If I go to OpenSea, which is the place where you sell NFTs,
Yeah.
it actually puts a royalty in the smart contract. See what I find. See if Cosmic Reef has whatever it's called has. See if I want to buy now. Yeah, it's got royalty built in. So that is one solution. I just think like the open permissionlessness has problems like for like regulation. So that's why I don't think, but they could well be. They could well be. I think for a ticket, like why do you want it to be an NFT? Like
You can show it off.
Pardon?
It could be like you went to this concert, like a Travis Scott concert, and you have the NFT, and like I guess like that'd be like cool to have. But
it would be cool. It would be cool, and it'd be cool if. So what I haven't talked about crypto is one of the main cool things is that your account is yours. It's linked to a wallet that you have the like anyone set up a wallet, like you have the 24 like words. If you lose those, you lose access to the wallet. Normally, if you lose access to your bank account, you call it the bank and go like, I need access. I lost my access. I forgot my password. With a crypto account, like the stakes are higher, but like no one else gets any access except you. And if you want to disconnect from a website or a site, you're like, I don't need to have my data anymore. You absolutely can. So that the fact that you've got a digital account that's so intimately linked to you means you can have better forms of linking stuff to people. Like if you know this account is actually yours, you can say, well, like, no, this digital asset is actually mine. And it's then far easier to prove if someone actually owns something with like a ticket or a fake ticket. I just think that the world's not ready for self-custody of assets. Like if you really do lose your wallet, like you've lost all your money and also lost all your tickets. Like we do actually want a middleman there, like to make sure we don't fuck up, pardon my French, like, to make sure nothing goes wrong. So that's why I'm like, NFT tickets, like someone's gonna lose them and then you've lost your plane ticket. Like maybe there's solutions around here, but I don't know. That one I'm a little, but I agree. It could be very cool.
Yeah. And I guess another question is why haven't we seen like mass adoption by like Google and like Apple into like the whole crypto space and like Web 3.0?
Skepticism of use case. Like what would Google do?
I mean, they already have like the name. They probably have the best like software developers, and they could probably make the best version of like a blockchain network, I guess.
It's a different blockchain network is like a cryptography problem, not getting too complicated. And also like, I think so Twitter have a cool thing, which is you can have your profile picture as an NFT. Because the Twitter founder is a big crypto supporter. Really big supporter. So that one you've seen, it's just, I think for highly regulated companies, you want to be very careful. They want to be very careful what they're doing. With the Visa are using crypto, they're basically saying, well, it's the DeFi thing. I should have used this example. It looks like DeFi is like, even with all, if you added regulation back in, it's really fast, like is faster than making bank transfers. I didn't show it on here, but we could have done a crypto transaction. Okay, it might have cost $6, but it would have been done in a second. And I could send money to you sitting in the US and I'm sitting in London. And like, you can't do that right now. So it's clear that crypto technology, DeFi technology, like is an innovation. So that will be used. And like, I could see a Visa using it. I'm not sure for Google. And what you don't want crypto to become is just like a database that's like a shared database everyone has, because that would be so boring. Facebook, unfortunately, going metaverse, which is basically saying metaverse is like, let's have this virtual reality thing where everything's an NFT, which is kind of cool. I can see why in a digital world everything should be an NFT. It's the only way to do ownership properly. But yeah,
for sure. And like the thing about like the metaverse with like Facebook, though, I feel like we still haven't really seen that mass adoption of like the VR. We're getting there definitely with like the Oculus. And
we tried the Oculus. It's amazing.
It's so much fun. And they keep coming up with new games, and like this is like zombie game that's really fun. And like shooter games are just improving and getting better. And it's becoming more like like it's become more like realistic to play these games.
Yeah.
And I believe like Facebook will have a very like be like the kings of like metaverse, because like with Facebook, everybody used to go on Facebook on their iPhone, but in the metaverse, like Facebook owns the device, which is the Oculus.
Yeah, they do, but I don't know. I don't think people will use Facebook on. Can you imagine checking your Facebook in like on an Oculus? Like,
Yeah.
no one uses. I mean, obviously Facebook have different products now. Like, no one uses Facebook, but everyone uses like WhatsApp and Instagram, and Oculus is obviously amazing.
Yeah. Did a great job with that.
Yeah.
Are there any NFT projects you're personally invested to or are looking at least, I guess?
Not sure I can say publicly. Unfortunately, I don't know off the top of my head, but they're all like private rounds of stuff. Usually, like I like investing in stuff coming out of Encode, and we publish everything that comes out like a hackathon or accelerator. So the best ones we just invest in, honestly, which is nice. You see the full journey. Like one we've invested in is like a soccer game that's really cool, which is an NFT project. And like I've known like the founders for like 2 or 3 years now. Like I've seen them like learn crypto, like get better at crypto, and now found a cool startup that's got like loads of a massive Discord, and NFTs are worth a lot of money, and etc.
Yeah. Wow. Very interesting.
Cool. Any other questions, guys? Cool. It's been a pleasure. Thank you very much. Jerry, thank you very much for hosting and organizing. And
Yeah, no, this was really great.
Great
Thank you.
engagement. My pleasure.
Thank you.
Thank you.
See you in Mexico, hopefully. All right, guys. Thank you very much. Have a good evening.
No, I appreciate you for coming in, man. It was like
My pleasure. Feel free to reach out. I'll reach out my email.
We'll keep sending the Encode Club events.
Oh, it's very kind.
Spread awareness.
Love to see you guys. Get you funded as a proper founder. All right, guys. Speak to you soon. Thank you very much.
Yep.
Bye.
Thank you. Easy.
Bye.